Hi guys, this is Mr. Ibrahim the trader of Gova Trading Academy. So I'm going to continue from where I stopped on Euro USD. So for me to continue from where I stopped, remember I told you that this is the Friday supply candle, bearish candlestick, which is exactly where I marked. I marked it out. I marked that area out. But I saw another bearish candlestick on Monday. Then I also marked the bearish candlestick out on Monday. You understand what I mean by the bearish candlestick I'm talking about, which is on the D1 time frame. Remember, guys, there is a good bearish candle on Friday. And again, I saw another bearish candle on Monday. So whenever you guys are analyzing the market, and you see that the analysis you did on the previous week did not trigger, try to check in for the new week. If the new week is giving another candlestick, a good candlestick. So you can see, if I ignored this candlestick that I saw on Friday by saying that I have to wait for market price to come back to the zone by fire by force, you can see that I won't be able to make any money on this trade this week. So it means that even if you have your analysis on the previous week and market did not come back to trigger on that trade, you need to analyze what happened on the area again on the D1. On the D1, you should be able to see that a new candlestick gave us another fresh information. And this fresh information is also a very good information because you can see the bearish candlestick is having imbalance. So what you have to do in a sell alignment, remember we are trying to analyze sell alignment. So in the sell alignment, we are looking for a bearish candlestick, and the supply of the bearish, remember this area here is the supply of the bearish. You see how market came back on this area with this bullish candlestick and market price dropped down. Can you see that? So this is what I like to see, guys. This is what I like to see. Okay, so I believe I've answered some of your questions, those who are asking me the question on this type of situations. All right, guys, so let us analyze. So this trade actually is giving us a risk reward ratio of, let's see, from the proximal line here. Let me delete this one. Whatever trade did not trigger, if this, you can see this trade, for example, on Friday did not trigger, and already the trade on Monday has given us the profit we are looking for. So I don't see any reason why you need to still continue. I don't see any reason why you need to continue holding the trade around here. You need to delete that order. Okay, you need to delete the zone on your chart. Now let's see how many risk is on this zone and how many reward did we get. So from the proximal line. Now you see on Monday, when market opened on Monday, we saw the alignments, right? But remember, on Friday, we didn't see the alignment on Friday. Remember, the alignment is a sell alignment. The green line is down. The green line is down. But on Friday, remember, this is the area we have on Friday. Look at it. Remember, this zone was what we saw on Friday. We marked out this zone on Friday. This area has not happened yet on Friday. This area here has not happened yet on Friday. So if that area has not happened yet on Friday, it means that this is what we are seeing on Friday. The period separator is like this. And in this situation, you can see that what we have is this. You can see that what we have is that we have the bearish candlestick around here, which means the bullish candlestick is far above, and the bearish the market on Monday is going to open anywhere around here below, even though we don't know exactly where it is going to open. But when market open on Monday, you see where market open on Monday. Market open on this area on Monday, just very close to the area where we roughly understand where market is going to open on Monday, which is around here on this bearish candle. Can you see? this bearish candle. So I'm marking the weekly equilibrium line as the opening of the bearish candle there. So you can see what we have is that the blue line is up, the green line is down. Whenever the blue line is up and the green line is down, that is a sell alignment, remember. But whenever the blue line is down and the green line is up, that is a buy alignment, which means we should only be looking for buy trade in a buy alignment situations, but we should only be looking for sell trade in a sell alignment situations. And that is it. Now let's see the risk reward ratio on this trade using the cross, from proximal line all the way up to the distal line. You see this is 14 pips risk, 14 pips. Mr. Ganu, you can speak now. How many pips is this?
The one up there,
Yes,
this is 93 pips.
how many now?
91 pips now.
91 pips.
91.
Correct. So what about now? Hold on. Let me see. Okay, what about now? How many pips?
88.
No, this is not 88 pips. Madam Ozioma, how many pips is this?
It's 88 pips.
88 pips, correct. You are right, Mr. Ganu. This is 88 pips, okay? The last number is 0, so this is 88. So this is how many pips now?
14 pips.
This is 14 pips risk. And the reward, remember the reward is going to be calculated from the proximal line, which is here, all the way down to where we saw the profits. Market price drop down all the way down to this area. You understand? So that is where we are going to calculate it. From that area all the way down there. So let me calculate it again. So it is going to be from here all the way down to here. Just put your eyes here. I'm trying to place this thing here. So again, let me do it from proximal line all the way down to that area. So you see, how many pips is this?
Nine.
Okay, let me squeeze out the candle so you can see how many pips it is. Let me do it again. How many pips now?
99. 100. 101.
Why do you say 99? Why do you see 99?
No, initially where it was, it is on 101. 101 pips.
This is 101 pips, isn't it, Madam Ozioma, right? This is 101 pips.
Yes, it is.
The last number is 2, isn't it? We throw out 2, so we are left with 101 pips. So yeah, this is 101 pips and the risk is 14 pips. So 101 divided by 14 is going to give us what? What is the answer? Please use your calculator. It means the risk reward ratio is what? What is the answer, guys? 1 ratio what?
7. 1:7.
Let me use my own calculator here. So 101 divided by 14 that's exactly 7.2, isn't it? And remember, we usually throw out this away. We don't need this. What we need is just the 7. So which means this trade is giving us 1:7, 1:7, right? 1:7. So if this trade is giving us 1:7, my question to you, Mr. Ganu, if this trade is giving us 1:7, if you risk $50 on this zone, if you risk $50 on this zone, for example, how much profit did you make if you risk $50 on the zone? Remember, the risk we took is just 14 pips risk, right? But I'm not talking about pips. I'm not talking about pips right now. I'm talking about the amount exactly, amount you risk on the zone exactly in money. What if you risk $50? Now, the $50 you risk, how much reward did you get at the end of the day if we are using 1:7?
$300.
Madam Ozioma, what is the answer?
$350. Because it's 7 times 50.
That's not right. That is not the correct answer, Madam Ozioma. So, Mr. Ganiu, what is the answer again?
I said 300
How is this 300? How?
because I risk 50.
And you get 7 times of 50. So what is 7 times of 50?
I get 350.
So why 300 before? Why were you saying 300? So it is, you need to use your calculator.
Okay.
Don't
It
use your
should be
head.
350.
Yeah, it is 350. Sometimes if we use our
It
head,
is 350.
yeah. So sometimes if we use our head to calculate something, sometimes we don't usually get it right sometimes. Too many family problems. All right.
Okay.
So that is it. The answer is $350. We made $350 profit on this trade if we are risking $50. If you are risking just $10 on this trade, it means you made $70 on this trade, and so on and so forth. Okay. So that is it, guys. Let me analyze other pairs. So with the explanation I made, I hope you understand that if there is a trade that you have on the previous week and you happen to see another good candle again on the D1, you need to follow the latest candle. You understand? That is what this is all about. Now let's move on. Euro JPY. Let's see what is happening on Euro JPY. Now, the D1 time frame mark the equilibrium line for the monthly, which is going to be here. And I believe you know the reason why we're marking it there, Mr. Ganu, right?
Yes, sir.
Yeah. So the next thing we are going to do is to mark the weekly equilibrium line, which is on the H3. So on H3, remember, we are not going to be marking it physically the way we mark it like this on monthly. We are going to be marking it at the back of our mind, because right now, as you can see, market has already closed here right now. Market has closed right now. You understand? So right now, market is going to open on this period separator on Monday. Do you understand? On Monday, market is going to open a candle on this period separator. Are you getting my point?
Yes, sir.
So is it possible that we see a bearish candlestick that came in? Right now, we are looking for a possible buy alignment, isn't it? Because we can see that the blue line is down and the current market price is what? Is up, isn't it? Which means Monday price is going to open anywhere around this area, which automatically qualifies to be a buy alignment, isn't it?
Yes.
Are you following my this thing, Mr. Ganu? Do you understand what I'm trying to say here?
I do, sir.
No, if you don't, just make sure you tell me you don't, please. The blue line is down. Look at it again. The blue line is currently down here right now. You can see right now, we have a bullish candlestick here, which is having the current market price. This is the current market price. Now, on this current market price, right now, we are assuming that Monday equilibrium line, there's going to be a candlestick on Monday. Whether the candlestick is a bullish candle or whether the candlestick is a bearish candle, we don't know. What we know is whatever candle it is going to be on Monday, the candlestick is going to the candle can open anywhere around here. The candle can open anywhere around here. So anywhere the candle opens, it is still going to be a what? The alignment is still going to be above. The alignment is still going to be above. The green line is still going to be above. You understand? So which means the blue line is automatically far below and the green line is automatically going to be above, which automatically qualifies to be a buy alignment. So it does not need to happen before we know what it is going to be. You understand? We shouldn't be waiting for it to happen. Right now it has not happened. We don't have the equilibrium line, the candle yet on the period separator yet. But what we know at the back of our mind, you see, this is what we have at the back of our mind. It is at the back of our mind that we know this answer, that logically, market is going to open anywhere around here. So anywhere around here, whenever market opens, it is still going to qualify as a buy alignment, because the green line, it is going to be above roughly, which even though we don't exactly know where it is going to open right now, but what we know exactly to the letter is that it is going to open above, and that is going to be a buy alignment. So in a buy alignment, you need to be focusing on buy trade candle, which means a bullish candle. Now, when you understand what the alignment is going to be, you can see right now, I understand what the alignment is going to be. Yes or no? Yes, right?
Yes.
Yes, sir.
The next thing you need to do after understanding what the alignment is going to be is to switch to the D1 time frame. Switch to the D1. When you switch to the D1, the size of the candle is like this. When you switch, you must make sure you zoom it out a little bit. Okay, zoom it out. Not too much, just a little bit. Not a little bit like this, but just like this. You understand? Now, zooming it out, I can see that the candle on Friday is a bearish candle. In a buy alignment, are we going to be looking at a bearish candle in a buy alignment? No. We are going to be looking at a bullish candle in a buy alignment, isn't it? Hello,
It
isn't it?
is.
Yes, it
Now,
is.
Yes, sir.
we are not going to be looking at this bearish candlestick also. We are not going to be looking at this bullish candlestick, because this bullish candlestick, you can see how market price break that area out, right? So which means the next validated bullish candlestick we can be looking at is the bullish candlestick that has not triggered yet, which is this one, right? This one is still fresh, isn't it? Right? That is the only fresh bullish candle we can see. Can you see that? Hello? Hello, can you see that, guys? Mr. Kanu, can you see that? Hello, guys. So can you see that? Can you see the bullish candle, Mr. Ganu?
Yes, sir.
You can see that this bullish candlestick is not fresh. That is why we are not going to be looking at it. So we are going to be looking at the bullish candlestick that is fresh. What does fresh means? Fresh means that it has not triggered yet. Market price has not come back into the zone and trigger it and trigger the demand yet. You can see this bullish candle now. Market has triggered the demand already here, isn't it? This bearish candlestick has touched the demand of the candle here. So we are going to go for the candlestick that the demand has not been touched yet. You understand? Now let's look for the one that has not been. You can see this one, this candle here, the demand of that candle has not been touched. And you can see that this is a good bullish candle. This is a good bullish candle in the sense that it looks like a rectangle in shape. We all know that a rectangle can be like this. It can also be like this. Isn't it, guys? A rectangle. But a square is
Yes.
like usually like this. It's just a box, isn't it? So we need to be looking at candlestick that looks like a rectangle, not a square. Anytime you see a candlestick looking like a square, there is no opportunity in that type of candle. And also, anytime you see a candle looking like a rectangle, at the same time looking like a square, it's not a good candle. For example, you see this candlestick now is somehow looking like a square and somehow looking like a rectangle at the same time. Confusing, right? You see that? Can you see that? It is looking like a rectangle. At the
Yes,
same
sir.
time, it is also looking like a square. Madam Ozuyama, can you see that? Because I can
Yes.
see the analysis you did on Euro NZD. That is the
Yeah.
type of candle I am seeing. I don't usually like taking those type of candle. I like to take candlestick that give me a very good body. Okay, a very good body also means that there's high imbalance on the candle. That is what a good body means. Whenever you don't see a good body on the candle, there's a very big chance that there is no very good imbalance on the candle. And remember, we only trade opportunities that have imbalance, because imbalance is what usually move the market price to either go down or go up. Now we can see that this bullish candlestick here is having a very good body. We need to highlight the demand of the candle. Now, what is the demand of a bullish candle? Now, let's say, for example, this is a bullish candlestick here, Mr. Ganu. Now, if this is the bullish candle here, remember, let's say the candlestick is having wicks, for example, wicks. We all know what wicks is. So let's say the wicks of the bullish candlestick is here. So we all know that in a bullish candlestick, the opening is here, right? The closing of the candle is here, isn't it? Hello?
Yes, sir.
Yes, it is.
Now, you need to also understand that the demand zone of a bullish candlestick on the D1 time frame is here. From here to here is the demand of the candle. That is the demand of the candle. It means your yellow zone, that, remember that yellow zone that we usually mark on a lower time frame, right? It means that yellow zone can be sitting anywhere around the demand of the candle. Anywhere around the demand of the candle. It means it is going to be a good trade, you understand? But at any point in time whereby your yellow zone is sitting on the body of the candle, you can see this is sitting on the body of the candle now. If it is sitting on the candle like this, it is not going to work. It is not good. Even if the trade happens to work out, but the trade is sitting on the body of the candle, the trade work out by luck. You understand? That is not the cheapest price in the market. So you need to be buying and selling in a major supply and demand levels, not just anyhow demand and supply levels. So that is it on a bullish candle. What about a bearish? Okay, what about a bullish candlestick that doesn't have wicks? What if the bullish candlestick does not have wicks? Then where are we going to mark our zone? Then you need to mark your zone here. You need to mark out that's your proximal line, distal line, at the opening of the candle like this. Can you see that? Remember that our proximal distal line, yellow, this thing. You need to just mark it out like this. Do you understand, guys?
Yes.
Yes.
Or let me just use it to mark it so that you can see, just like this. Just mark it like that. You can see the way it is. Now, that is how to do it, guys. Now, what about if it is a bearish candle? In a bearish candle, it means that we are, okay, let me just explain bearish candle. So let's say in a bearish candle, let's say in a bearish candlestick, the bearish candlestick also has wicks. Let's say there's wicks on the bearish candle. So the supply of the bearish candle, you need to understand that the supply of the bearish candle, the opening of the bearish candlestick is here, the closing of a bearish candlestick is here. Now, the supply of the bearish candlestick is anywhere around here to this area. Anywhere it can be, that's the supply of the candle on the D1 time frame, anywhere. So your yellow zone can be sitting around here, around this area, it is good, okay? But at any point in time whereby your yellow zone is sitting on the body of the candle, it is not good, it is not good, okay? If your trade is sitting anywhere around here, it is not good, it is not. But if it is sitting around here, if your trade is sitting anywhere around here, it is good, all right? So that is it on the bearish. Now, also on the bearish, if the bearish candlestick does not have wicks, remember, if the bearish candlestick does not have wicks, remember, you can have your yellow zone sitting on the supply of the candle like this, okay? So that is it on this. So it means that in a buy alignment, it means that in buy alignment, we look for, and in a sell alignment, in a sell alignment, this is the type of candlestick we look for. So in a buy alignment, we look for a bullish candlestick on the D1. Okay, let's say in a sell alignment, we look for a bearish candlestick on the D1, a bearish candlestick on the D1. Okay, we look for a bearish candlestick on the D1 time frame. But in a buy alignment, we look for a bullish candlestick on the D1. We look for a bullish candlestick on the D1. Okay, so that is how it works. That is how it works. Now let me analyze other trades. But before then, you see that we highlighted this demand zone of this Euro JPY, isn't it? Because we are looking at a buy alignment. Remember, guys, isn't it, guys?
Yes.
Yes.
So immediately you highlight the area, the next thing you need to do, don't do anything next. The next thing you just need to do is very simple. Switch back to a lower time frame. You can see all these things are step by step, right? Step by step. Switch back to a lower time frame. Now, when we switch back to a lower time frame, do you notice how that zone that we marked on a higher time frame is corresponding with this area when we switch lower? Do you notice? You see how it is corresponding with a formation on a lower time frame? Can you see that?
Yes.
Just that whenever you switch lower, the area might not be marked properly. What you need to do is just mark out the area properly like this. Mark your proximal line properly like this. We all know what a formation looks like. So after you know what the formation looks like, you just need to mark out that formation properly whenever you switch lower, isn't it? Isn't very simple.
Yes.
So you can see the trade
Yes.
has been triggered for this week. You can see it has already triggered right now. It has already triggered. Can you see that? The trade triggered when? When did this trade trigger? Let's switch back to H2. This trade triggered today, as you can see. Can you see? The trade triggered today. So it means next week, we're expecting a push in price. Can you see that?
Mm.
That is what we're expecting because this area, this level is going to be the demand zone of the new week that is coming. Is going to be the demand zone of the new week that is coming. It means that we analyze what happened previous week, which is this week. You know, this week is the previous week. Next week is going to be the new week. Next week is going to be the new week. We analyze the previous week to know what is going to happen next week, which is the new week. Show me any trader who knows what is going to happen next week. I'm going to be waiting. They are trading based on chart patterns and indicators, and they don't understand that the market doesn't work like that. Whenever you want to go and buy tomato or anything, or you want to buy iPhone, are you using trend line to know the price of your iPhone or something? No, that is not what we are using. That is not how the market works. We are using logical demand and supply. Whenever you want to buy anything in real life, you determine the most cheapest price possible. You go for the most cheapest price possible. I don't see any reason why people are using trend lines, chart patterns, and indicators in the market. That doesn't make sense. We don't expect big banks who are trading with billions of dollars to be using chart patterns and indicators to analyze what is going to happen in the market. It doesn't work that way. So if they are not doing it, why are you doing it? You know, that is for retail traders who are still doing it. Why are they doing it? If they truly mean the business. Anyways, that is it on this analysis on Euro JPY. So our equilibrium line is going to be anywhere around here on Monday, which I don't know where it is going to be. So you don't have to mark it right now. until Monday opens. After Monday has opened, then you know where to mark it because the candlestick is going to be there physically. You understand? Then you are going to be able to know where to mark it. So let's move on to another pair.
No,
Let,
sir.
let's say AUD USD. Hold on, please. AUD USD. Now on AUD USD, this is what happened this week on AUD USD. D1 time frame. From the D1 time frame, this is the equilibrium line for the month. Is here. Then we switch to the weekly time frame, which is the H3. On H3, we are able to see that the alignment is going to be a sell alignment, right? A sell alignment. So in a sell alignment, what we are looking for is a bearish candle. So I switch back to the D1 time frame to look for a bearish candle. Now, the bearish candle I'm seeing is this candle here. Can you see that candle?
Yes.
Yeah, this is the candle of Friday, right? This is the Friday candle here. This other candle here next to it is a Thursday candle. Can you see that? Can you see that?
Yes.
Yes, sir.
Remember, as at the time of the analysis, that candle was not a bearish candle on Friday. The candlestick before was a bullish candle that went up. But as Friday session is closing, the bullish candle turned back into bearish. Do you understand? The candle went down. As the candle is going down, it turned back into a bearish candle. Are you following? So, but let me see. Let's see this area on a lower time frame. Let's see what this area is on a lower time frame. Even though I don't like this type of candle, also you can see the type of this candle is looking like a
Square.
right. It is looking like a square. So if the candlestick is looking like a square to you, you can decide to go for the next one that is good. You understand? You can decide to go for the next one that is good. That is how to go about it. But let's see what is happening on this candle here right now. So you can see this is the area. So the area is here. So the trade has already triggered already. But the candle is not a good candle. That is why the formation is not a good formation. You understand? You see how the formation is. It is not a good formation. So let's see the next other candle, the next other bearish candle that we have, which is this one here. So let me switch lower to see the area on the candle. So switching lower, this is it. You see that this is the formation on the candle. Let me switch lower again to highlight it properly. You see, this is the zone. Right? Can you see the zone? So this area has triggered, or this trade has triggered already. You see the trade has triggered here. So on the D1, this is what it looks like on the D1. You can see it is sitting exactly on the supply of the candle. Can you see? Our zone is on the supply of the candle. Hello guys, are you there?
Yes, sir.
Yes, sir.
That is it on this trade. Now let's move on to Euro NZD. On Euro NZD, this is the trade. If you have any question too, you can start asking now. Now the next thing is on H3. On H3, this is a buy alignment trade, as you can see. How did I know this is a buy alignment? Because the blue line is far below. The green line is going to be anywhere above here, anywhere above. So that automatically qualifies to be a buy alignment. So switching back to the D1 time frame, I'm looking for a very good bullish candle. Now I see that the bullish candlestick you took was this area here. And if you notice, the candlestick here looks like a rectangle, it looks like a square. Can you see that? So you need to be careful in this type of situation. You need to be very, very, very careful. Okay, Madam Ozioma, can you see that?
Yes, sir.
candle looks like a rectangle, it also looks like a square. It is not very clear. Does this look confusing? Does this look like a rectangle and a square at the same time? No,
No.
it's a clear rectangle. This is also a clear rectangle. This is also a clear rectangle. This is somehow confusing, a square or a rectangle in between. So you guys need to know how to focus on candlesticks that are very, very clear. You understand? Very clear.
Yes, sir.
You see, the other one here, just below it here, that candle is a very clear rectangle candle, which means there's imbalance on the candle. If I switch lower now, you should be able to see the formation on the candle, a very good formation. You see, this is the area. Can you see that? Price came back to this area. I took this trade. I took it. Okay, I took it. That's my zone. I took it. Price came back here and triggered and then went up. Very clean. But right now, for this new week, to know what is going to happen on the next week, the candlesticks are not looking good yet, right? So we need to wait. Do you understand? We need to wait. We need to wait.
Yes.
Maybe on Monday we might see a very good bullish candlestick on Monday. Monday market might open and we might see a very good bullish candlestick on Monday. And then what we need to do is just to highlight the demand zone that we are going to see on Tuesday. Remember, on Tuesday is when we are going to analyze this area to see how market was going down into the area, and then we are going to mark out our zone and expect price to rally up, because Tuesday candle might be a what? A bearish candle that came back into the zone, isn't it? That came back into our
Yes.
demand area, that came back into the area.
Yes.
Yes.
This is how the market works. Mr. Ganu, do you now understand the logic here?
Yes, sir.
Even if you don't fully understand yet, go back and start watching all those videos and you should start getting the point, okay? You should start getting the point. So I think,
All right, sir. I will.
guys, that is it for today. That is it for today, okay?
Hello, sir.
So, all right, also, one last thing. If, let's analyze AUD NZD. AUD NZD, this is the monthly for AUD NZD. This is the weekly for AUD NZD. You can see that the monthly and the weekly current price and the blue line are in the same area, right? Are in the same area. I don't like to see this in the market. I don't like it. Can you see that? The monthly equilibrium line, you know, other peers that we analyzed previously on this video, is either the blue line is far above and the green line is going to be below, isn't it? There is gap between the two lines, isn't it? There's very big gap between the two lines. But you can see right now,
Yes.
line and the current market price they are close to each other. I don't like to see this. So if you are seeing this on your own chart, always ignore the chart. Always ignore the analysis on the pair. Which pair is this? Is AUD NZD. It means continue going to other pairs and analyze what is going to happen on other pairs. Okay, on other pairs. So that is it, guys. That is it. Any other question? Any other question? Do you have question?
Yes, sir. Sir, I want to know if a trade triggers, you understand, can it come back and can one as in take that trade for the second time? Is it possible?
Okay, that's a very good question. Let's say, for example, you have a trade here. Hold on. Let's say, for example, this is your zone, all right?
Yes.
And on this zone, you have your formation here, drop base rally. Market price happens to come back to the zone, triggered and rally up,
Yes.
and the market price came back again. You are expecting to enter the trade again. Is that it?
Yes. Yes.
No, don't do this. Don't do this. You don't